I thought it'd be fun today to take a look back at the madness that is the last 12 months. Because when the stock market's only really been going one way and people have literally made millions of pounds out of JPEGs, it can be a real lonely place indeed to sit here and kind of criticise so-called investment strategies. But I've been in this loft by myself for about 2 years now, so lonely is all right with me. Let's go.
Winning is everything, huh? Nah, winning is the only thing.
If you couldn't tell, that was Snoop Dogg. And his views on winning ring out like a war cry for investors in 2021. For the last 12 months, winning has been everything, because everything has been winning.
Winning? I win here and I win there. Now what?
As a result, caution can go out the window, and new investors can make the classic mistake of chasing any hot new trend or promise of the next big thing, because they lack the wider market experience and skepticism that comes from having your butt handed to you by the markets.
Oh, it went to zero!
It goes without saying that money follows success. It's kind of a feature of the markets. For example, if an investment fund has a really good year, you can bet that the next year, money will absolutely pile into it. Cathie Wood's ARK Innovation ETF was a classic example of this. When it hit its record-breaking year, money just poured in. Since then, it's kind of struggled a bit and the money's flooded right back out again. But put FOMO to one side because there's a far more nefarious feature of an exuberant market. Something more sinister is clinging onto the coattails of the stampeding bull run. When people's desire to profit from the next big thing is at record highs, you can bet those snake oil salesmen will roll into town. Every single investment on this list share a common characteristic, and that is the fact that the people behind it, the people bringing it to market, stand to make a lot more money from it than the people actually investing in it. Let's start with one that's been absolutely everywhere in the last 12 months. The SPAC, or reverse merger. The use of SPACs has absolutely exploded in the last few years. Special purpose acquisition companies or blank check businesses are quite interesting and really kind of simple in their concept. Basically, set up a company that does absolutely nothing and then list it on the stock market. Get people to buy shares in that company at typically $10 a share and then use the money you raise to go out and buy a business. That acquisition is the A in SPAC. At the point that that SPAC has then bought that business, they kind of reverse merger, meaning that the business they've bought is then listed on the stock market. These SPACs are touted as a way to get businesses to the stock market quickly, a way of avoiding all the red tape of a traditional IPO or public listing. And for people who buy into the SPAC, you get a chance to get a business at an almost pre-IPO price. That's assuming the manager or sponsor of the SPAC negotiates a good price. Businesses that have come to the market in recent years using this kind of SPAC arrangement include Virgin Galactic, Lucid Motors, BuzzFeed, DraftKings, SoFi. The list goes on and on and on. My issue here isn't the companies coming to market. I actually purchased a bit of Lucid Motors, which I did all right on. My issue here is the incentive structure that exists for the people that basically run the SPAC. I mean, it's a joke. The sponsor of a SPAC typically gets 20% of the business at a cost of only 3 to 4% of the IPO proceeds. So in plain numbers, if the SPAC deal is worth, say, $250 million, the person who sponsors or creates the SPAC deal can buy $60 million worth of shares for around $7 million. I mean, it kind of flies in the face of the idea that the people who are investing into this SPAC are getting a good deal when the person who sets it up is getting the price 10 times cheaper than you. Why do you think every Tom, Dick and Harry has launched a SPAC? Bill Ackman, the famous investor, Chamath, the guy who likes to pretend to be in touch with the youth, whilst at the same time making an absolute killing on bringing Virgin Galactic to the market.
Virgin Galactic, the company, maybe it was your first SPAC deal, I think it was. You sold a fair amount of that, 38% or so, 40% around there. Why?
But hey, at least these guys are investors. Shaquille O'Neal, Steph Curry and Serena Williams have all launched their own SPACs. Even Sierra has a SPAC. Yep, Sierra.
Let me see it.
Bright Lights Acquisition Corp is what it's called. I mean, she's Mr. Trick here, hasn't she? She should have called it I Bet You Want the Goodies Inc. or Everybody Want to SPAC. So why are all these celebrities launching SPACs? Simple, because they can make bloody millions if they pull it off. I mean, the narrative is that the sponsor of the SPAC is meant to go out and find the investors into the SPAC a good deal. But everything's a good deal to them when you're getting 20% for 3%.
I've come to bargain.
Add to this point that there's a rule within the SPAC setup that a merger has to be completed within 24 months. Basically, that rule was introduced to protect people who invested into the SPACs so that the sponsor didn't just sit on their cash the whole time. The reality is, though, the sponsor is just incentivized to close any deal just so they can secure their 20% bag. Failure to do so within 24 months, well, I'm sorry, Sierra, but those goodies, they're going to stay in the jar. Honestly, 16-year-old Damo loved Sierra. Moving on, The reality is SPACs are an old financial instrument that always rise in prominence when markets are exuberant. They are a tried and tested tool of the snake oil salesman, allowing them to cash in on demand for hot sectors. Wall Street won't approve a traditional IPO for WeWork because the business absolutely burns cash. SPAC. Everyone wants to invest in the next Tesla, but the problem is a lot of these car companies aren't very good at making cars. SPAC. Space. It's the next big thing. SPAC. Now take my rantings with a pinch of salt. It's very much possible to profit from SPACs. As I said, I made money on Lucid Motors. But the motivation of the people sponsoring these SPACs isn't to get you a good deal, it's to make themselves a bucket load of cash by taking advantage of increased demand. There's a saying in Wall Street that kind of goes, raise money when it's available, not when it's needed. There's no coincidence here that the amount of SPACs increases when the market is exuberant. Just look at how many SPACs have come to the market in the last couple of years. And look when the last patch of demand was. Oh, what a coinkydink. The exact last time the markets were on a tear. If you want to invest into a SPAC so you can get into a certain business, then by all means go for it. That is your choice. But just question the intentions of the people doing them and look at the so-called advertised benefits with a bit of skepticism. I mean, the whole it gets around the traditional IPO process means that it just circumnavigates all of the red tape that traditional Wall Street puts in the way, which is typically a good thing because it means, robust businesses get to market. Just because a business is listed on the stock market through a SPAC doesn't mean that it's a good business. This is like a backdoor way to the stock market. Next on the list, and arguably the worst offender, is a collection of quote-unquote investments in the crypto space.
And damn! There we go!
NFTs, pump and dump scam coins, and some of these super high-yielding DeFi projects promising 1,000,000% APYs. Now, I've grouped these together even though they're all different because they do share some similarities, namely that they're all crypto related. Now, many will say that we're seeing the iterations of a new world order, that these projects are groundbreaking, and only in the crypto space could they exist because traditional finance is dead in the water. Now, I do agree that a lot of these schemes could only really exist within the crypto space. I mean, NFTs and the whole idea of non-fungibility kind of relies on blockchain technology. But what I'm talking about here relies on crypto for another reason, and that is the complete lack of regulation within this space. Pump and dumps and promises of ridiculous rates of return that amount to nothing more than Ponzi schemes are as old as investing itself. But there are strict regulations and even stricter punishments for offenders in the traditional space who try this on. No such repercussions within the crypto space at the minute, which means we have this absolute cesspit of scams, which all seems to be fueled by greater fool theory and perpetuated by people with influence who just peddle these scams to their audiences. SafeMoon, Squidcoin, Lunar Yield, OneCoin, the list of scammy rug pull pump and dump coins goes on and on and on. It completely detracts from anything good that the legitimate projects are actually trying to achieve within the space. And, at the core of some of these scams is actually quite interesting technology. The idea of non-fungibility to me is fascinating. But can someone please tell me something? Is Gary Vee and his hand-drawn V friends with names like Curious Clam and Articular Armadillo? Is that the best we got? These things are selling for thousands of dollars. Gary Vee is a marketeer. He is a salesman of the highest order.
Literally once a day, genuinely sit there for 5 minutes and make pretend one of them got shot in the face.
As a salesman myself, I know the first rule of sales is sell what is selling. Find a hot product and peddle it. If it's in an unregulated industry, even better. I mean, Gary Vee has got to be taking the absolute piss here, surely. $121,000 for the gracious grizzly bear. There is nothing gracious about the leg position on that bear.
I can't do it.
I think these NFTs might be a nice way to engage with your audience, but charging $121K to do so, I'm not comfortable with that. The Matrix ones that launched with the film and had the option of taking a pill, that's a nice concept and a way to engage with fans and for the fans to show support for the movie at a reasonable price. Keanu Reeves wasn't a fan, though.
Think about the concept of digital scarcity and things that are, they can't be copied.
That are easily reproduced.
Well, but they're not the same, right? It's not.
Certain NFTs may prove to be amazing investments, but peddling pixels for pure profit seems like the definition of digital snake oil to me. I'd be far more interested in the application of this technology for real-world assets personally. Let me sell my house via an NFT instead of involving a solicitor in the process and saving on those fees. But Pudgy, the persistent penguin, nah. With scam tokens, I don't think I need to say much here. There seems to be an infinite amount of money just chasing around the next potential project to blow up, because survivorship bias means we all hear the story about a guy who slapped a tenner on Sheba and now is a billionaire. This isn't investing, it's gambling. The only way to win here is to get in quick and get out even quicker. By the time this coin is on mainstream media, it's too late. It's already over. And in reality, the person who secures £1 billion off a tenner or whatever has taken that off millions of other people who have put their money in and lost it. The news then peddles that story so hard, we all sit there thinking, God damn it, if I'd only invested in Shiba Inu 3 weeks ago, I'd be a billionaire right now. It's like turning on the news, seeing the lottery numbers and kicking yourself that you didn't bet on those lottery numbers the week before. The only surefire winners here are the ones who launch the coins because they get to cash out big on their holdings, which they acquired for essentially nothing. These scams are only successful because of people's desire to get rich quick, so much so that they're willing to put their money into cryptocurrencies which are actually just copy and paste jobs of other cryptocurrency code that are then wrapped in a meme of a meme and peddled by a development team that remain completely anonymous, so when they steal the money, they can just do one. The fact that large tier finance creators legitimize this practice by even discussing it in any form is shocking. If you want to play that game, then go for it. I understand it can be fun and it's like a nice little roll of the dice, tenner here, tenner there, whatever. But don't call it investing and only put in money that you're willing to lose, because chances are that's exactly what you will do. Finally, the Metaverse. This one is my personal favourite out of the lot. You can't log on to YouTube at the minute without seeing some creator with a photoshopped headset on their thumbnail promising 5 ways to profit from the Metaverse. It's like Mark Zuckerberg stepped out, said Meta, and everyone feels like Steve Jobs just unveiled the iPhone again. Both virtual reality and these metaverses have been around for a while. Mark has not said anything new here at all. Anyone who's got kids will know that Roblox is a full-blown metaverse designed and perfected for emptying bank accounts. And yes, virtual reality and its applications will be far-reaching and completely change all of our lives. I have no doubt about that, but they've been saying this since the 90s. And we're still only at the point of playing games that to me look like Fruit Ninja crossed with a Nintendo Wii. Glimpses of Heaven, Visions of Hell is a book written in 1992 that documents all the ways in which virtual reality will change our lives. The book literally describes itself as, for the non-technical reader who wants to keep up to date with the latest trends, looking at what will be developed in the near future. 30 years later and we're still at... Zuckerberg's push towards the metaverse is likely more to do with the realisation that his flagship products' reputations are going down the toilet, namely Facebook and Instagram. It's funny that the Oculus app, which accompanies the Oculus device owned by Meta, was the most downloaded app over Christmas, showing they sold a bucket load of these headsets this year. It's a very clever marketing campaign that seems to have worked perfectly in my opinion, helped along by every content creator in the world creating metaverse content because it's a trending topic. Take a look at the Google trend data for metaverse. The graph looks like a pump and dump crypto coin. Metaverse is a trending topic, content creators will make content on it, and you can bet your bottom dollar that in true form all the snake oil salesmen will step forward and offer you products relating to this hot topic. The narrative being pushed that you can buy land in the metaverse and that somehow is a great investment is borderline insulting. Metaverse Group, who claim to be a digital estate agent, have described the opportunity to buy digital land as the same as buying Manhattan Island before it was developed. New York, really? This story is then peddled by sites like tokens.com, who just so happen to be owned by the Metaverse Group, and then it's picked up as an interest piece by websites like Business Insider, who slap a clickbait title on it like digital land prices are soaring. Manhattan Island has value because there is only one of them. It seems like everyone thinks that this metaverse will just be one place, that by buying a piece of land in the metaverse, you're securing something that is truly unique, like buying land on Manhattan Island. But in reality, what's being sold here is a stake of a Manhattan Island, but in a world where there's the ability to make infinite new Manhattan Islands, and no one knows which one will be the one that we use. When Tim Berners-Lee invented the World Wide Web, he just gave it to us for free. Because he knew that if he didn't give it away for free, people would create their own World Wide Webs and then charge you for access to them, meaning that it would be disjointed and splintered. Kind of like streaming football in the UK, where you can't watch your own team without having 3 different streams, or shout out Ronaldo 7 and Reddit soccer streams. Imagine an internet where you have Facebook and its products on one, but if you don't pay the subscription to the other World Wide Web, you can't access services like YouTube. As it stands, this is exactly what these metaverse land companies are doing. They're cloaking everything under this banner of the metaverse, when in reality they're selling their own digital products on their own servers, which are solely owned and operated by them, and you can't move that around, and it might not be recognised by another company that are also selling similar services. Infinite New Yorks with no ability to tell which will be the one we all use. But regardless of that, someone please tell me this. If this is the opportunity of a lifetime, if this is the new New York, the new Manhattan Island, then why the hell are these guys selling it?